Thank you for tuning in to another edition of the VULCAN Report. This end of day report is for trading on Monday, January the 23rd, 2017. Well, first of all, I do apologize that there was no pre-market PulseScan uploaded to the YouTube channel this morning. It was not for lack of trying. There was some audio issues this morning with the software, so I'm going to be working on that, trying to fix that. But nevertheless, we're going to make it do what it do. So I do apologize for that, and hopefully we can do better tomorrow. But excuse me, for those of you who missed this morning's webinar on the 2-bar Charlie, you're definitely going to want to go and tune into that. So those of you who are subscribers to the weekly post-wave price triggers, go ahead and sign into the Learning Academy, and you will be able to see that there. Also, if you missed it, you're going to want to check the one on stop losses. Very powerful stuff there. The one that was done on the stop losses also got into options training as well. There was a lot in that last webinar. We did the stop losses. We did options. We also covered the little known secret on Wall Street, which is the methodology that practically never loses. So you can learn how to put on a trade that pretty much never loses. And I think you will find that to be a big eye-opener. So again, the Learning Academy is free to weekly post-wave price trigger subscribers. All right, getting into the end of the day report, looking at gold. You see here, gold finally muster the strength to close above 1200 today. So it's really fighting the war here at the bottom of the Kumo cloud. It's now pushing up into the cloud, which is exactly what we wanted to see. Wanted to see gold push up into the cloud there, as it's now starting to move forward toward the long-term trendline resistance, which is exactly what we want to see. That trendline resistance is coming into fruition on the weekly chart, and basically we still have about 20 points to go. I want to say somewhere around there. 1233.70 is going to be trend line resistance, so that's about right. And then that puts it on the weekly pretty much in the midway of the Kumo cloud, so that's a good thing. Right now the momentum support is at 1193.90 on the weekly chart. All right, so long as we can stay above 1193.90, we're good on the weekly. All right, so our range is from 1193 to, like I said, the 1210 level, something around there. So right now we're doing good. We're sitting pretty, as long as we can stay above 1200. And going forward, if we can get outside of this Kumo cloud, it should really start hit those ramps, and we should start marching up toward 1400. Taking a look at silver on the weekly chart. Off to the races here. Not inside the Kumo cloud yet. Still trying to decide what it wants to do. But the good news on the silver is that we close above $17. As long as it can stay above $17, then silver is going to be okay. We don't have to worry about silver. Silver is going to follow suit with gold, even though it may be just slightly weaker as far as momentum is concerned. Our momentum trend line for this week, support's going to be at $16.85, and I think we can continue to push deeper into the Kumo cloud on this one. On the daily, we already did push into it a little bit. I'll show you that. The daily chart is a little bit more telling. That's why this is like a super trend that's forming. This could be very, very powerful. If we can get above $18 and close above there, we should be able to take out these old highs back here, these old spike highs with no problem, and then get back up toward $19 and $20 in silver. Now, this is going to be on the back of what's happening with the U.S. dollar. The U.S. dollar finally broke support today. You can see it on the daily chart. We broke support. We broke the old lows, and now we're getting into the thinness of the thin layer of the Kumo cloud. Thin support right here at par. So we should begin to drop further as momentum gains to the downside. Taking a look at the weekly chart. You can see it better here. So 1, 2, 3, 4. This is the 5th week of downness in a row. We crashed below this initial trend line support here. And now we're headed toward 97, 92, somewhere around in there. And we may even be able to spike down below the Kumo cloud and get real deep into the lower 90s if we break 96. So as these cheap prices come in the dollar, it should really help push commodity prices higher, such as gold, silver, soybeans, things of that nature. That's what you want to see going forward. And like I told you also, as you've seen the dollar, you've seen Bitcoin. Bitcoin should continue to follow suit and get down to test that 799, 780 level. And then we should be able to get lower into the 700s in the Bitcoin. Again, just looking at the chart here, it's telling the story. Overhead resistance now is at 101.24 in the dollar. If we take a look at Bitcoin, you see here looking at the ETF on the weekly, it's kind of flattened out here. Doesn't really have any bullishness to speak of to help it out. Let's take a look at the daily chart. The daily chart too, it's sideways, as you can see here. And we do have a lot of overhead resistance. The only thing that you could probably make a case for is the filling of some of the gaps. Here's a gap, but we filled it here. All right, and then we created another gap to fill this gap back down here. This one here is kind of yes and no right here because we're right there. So technically speaking, this should be fine. But this one here has been filled, so we should head lower. Only thing is, if we level out, there's a ramp coming up here. So we'll see if it falls below it, then that creates a somewhat different scenario. But just looking at this thinly traded ETF kind of gives a picture of how Bitcoin is trying to be a little defiant with the dollar, but it's still down. 1, 2, 3, 4 trading sessions on the daily in a row. Looking at the weekly, we got 1, 2 weeks. This was kind of flat, so this is the 4th week. So out of, it's still down overall. All right, so 3 out of 4 trading sessions on the week, 3 out of 4 weeks, we're still down. We haven't gained any upside momentum. So this will be interesting to see. Will it just explode for no reason? Who knows? We'll have to watch it closely and see what happens. Now let's take a look at oil. All right, looking at the crude oil, it's still hanging out at this 52 level, 52.90, 5,300. So between $52 and $53 is where we're hanging out. I think 55 is going to best. So this one's still bullish in my opinion. Looking at the NASDAQ, it's still bullish on the weekly. Nothing bearish to talk about. Take a look at the Dow. The Dow is leveling off, but it's still bullish. This is not a bearish picture. This is a sideways consolidation. Taking a look at the Russell. Same as the Dow. Really nothing to talk about. But on the other hand, we have this Nikkei over here. And it's already starting to come off. Will it come down here and test this and head lower? Is this a precursor to what's happening? What's going to happen with stocks? We don't see the sign in it happening in the stocks yet, so I'm going to have to say no for now. And until something changes in the algorithms when we update it today, we'll see. But as of right now, we got to watch this Nikkei because it could be leading the way and being a telltale sign. So anyway, with that said, remember, bulls make money, bears make money, but pigs get slaughtered. So remember to take what you can, give nothing back. And remember, pulsewavetrading.com. Do yourself a favor. Come on over and learn how to trade these markets, learn how to hedge your physicals, and learn how to ride these pulse waves in the market. And you'll have access to the Learning Academy, which is free with your paid subscription to the weekly pulse wave price triggers. Have a great evening.